Welcome back. I'm Lydia Gable with Compass, and I'm so excited for today's topic since it's a hot topic in California. I have my good friend and CEO expert of insurance with Wow's Insurance, Robert Feldman.
Thank you for having me come in today.
And love that you're here. And insurance has always been a strong topic that you and I have talked about. You've been on here before. And obviously, since January, it's become even more important. So I'd love to just kind of hear from you what in general, let's just start as an overview. What do homeowners need to know about what's going on in insurance? A lot of cancellations, a lot of insurance hikes. So if you could give us a summary, I'd appreciate it.
Absolutely. First of all, thank you for letting me get in today. Just some background for everybody. My name is Robert Feldman, CEO and co-founder of WOWs. We are a wholesaler. We bring insurance carriers into California. We do a little bit of retail, working with your team. You're a great team. We're seeing a lot of changes right now. The market has changed when it comes to insurance. It's been boiling up to the point of what happened on January 7th. Market has changed. We keep bringing carriers back into California. We're holding the line right now. So there isn't really a segment that's still there's a lack of coverage in California, from a one bedroom condo to a 15,000, 20,000 square foot home. We have coverage across California. The problem is, it's just the volume of companies. There's just not a lot of competition at this moment. We plug things in and then we watch others leave. So really what consumers need to understand right now is getting out in front. The non-renewals are going to be happening. There was a major announcement yesterday from a company called AZ Guard that does larger homes across California. They announced, there's a Berkshire Hathaway company, that they're non-renewing now. So that's on top of the other companies like State Farm and Travelers and others that are doing it. But with that being said, we've been able to bring in companies like Stand and all these great companies that we keep continuing to bring back in. So it's a constant battle. But getting out in front and understanding, really what your current insurance situation is, and really getting out in front of it, it's important. You can't wait till last minute. We're seeing way too many of those right now, I hate to say.
So I think as a homeowner, they have to get out in front of it. But now can we talk about a quick segment about HOAs and condos? Because a lot of people bought into HOAs that were covering homeowners insurance, and those policies are starting to potentially not renew.
Well, it's getting pretty scary. So we're seeing on the HOA side, that's a commercial insurance side. So I'm using the residential side, but I kind of gotten pulled into this. We're seeing HOAs even locally in Westlake. There was an HOA that was dropped by farmers. They're a $55 million rebuild cost. Farmers had them at $85,000 a year for the 101 units. It went from $85,000 a year to $634,000 a year. And the problem for HOAs right now is, if they're not insured to value, Freddie and Fannie has started to create what's called a blacklist, where they're just saying, we're not going to loan to these properties, which now drives down obviously the cost, because then now you're having people doing unconventional loans and or having to be all cash. It's gotten to be really sticky. We have talked about this forever at WOWs. Things need to change. We have to get proactive. The fires continue, and they're going to continue. It's getting things which we call 3 steps, is really the second step, which we kind of steps. The first one is just insuring to value. But also the second step, which is really important, is what's called fire hardening. And we're doing a ton of that up front. We have companies that do fire hardening programs, and they do annual mitigation plans. These are the things that are going to happen, whether it's a single family home or an HOA. Everybody's going to be involved in this. And I'm sorry, there's going to be a lot of changes. We're working with consumers now over people loving palm trees or eucalyptus trees. Well, or cypress is the ones that are even crazier. Those are fire bombs. In a fire area, if you have those trees, your survival rate, if it's anywhere near your house, it diminishes exponentially. So these are changes in the fire hardening you're going to see coming forward with all the carriers we wholesale with, and for all the insurance brokers, and even our own program.
So fire hardening, can you give us a quick summary beside trees? Like, what can a homeowner do for fire hardening?
Well, the best thing a homeowner can do now, and we've been able to see this, is really you need to have a fire hardening report. What a fire hardening report, we do it standard on all of our programs. We do it proactive prior to binding, instead of being reactive and then having insurance companies cancel. What the fire hardening report takes into consideration is basically the entire footprint of the property, where every tree is. is what is the brush? Is there anything within 5 feet of the house? That's a zero. If you go on to CAL FIRE as an example, CAL FIRE has their lean, clean, and green, which is a program they talk about with the insurance carriers are following. That's like entry level. Maybe that's entry. That's like that. That's the base level. Is these 0.5. There are going to be companies that are going to take into consideration and using analytics and using AI. Now, on a fire, they run scenarios and says, okay, if this tree is still here and a fire comes in from this direction, what's the percentage likelihood the house burns? And so they take all those into consideration. So when they start balancing these things, we've been very successful fixing a lot of consumers throughout California. We're starting to move it into 8 to 9 states, and the fire hardening is going to be it. I mean, the older houses are going to need a lot of work. You having open exposed eaves, having the vents not closed. I mean, these are all things that seem basic, but they're just needed to help a house survive.
So I'm getting emails. Do you see new companies forming, coming out? I understand there's fire retardant paint.
Yes.
And there's people who are putting screens on the gutters.
Look, that's a given now at this point. If you don't, I'll say to everybody out there right now, if you don't have 16th inch mesh over your gutters and over your vents in your attics, the insurance companies aren't going to touch you. They're going that direction. But again, the fire paints. There's a great company I like called Komodo. Komodo, like a Komodo dragon. They're spectacular. I keep researching them more and more. And for some of the, where they have the stuff that it's non-combustible, you can see in the Palisades, the houses they did, because the fire burned up to the lot line, almost like they painted a line.
Wow.
And you can see all these incredible things. A lot of these companies now have systems that are as crazy as like iron dome systems that you see like in military use, where they take out ambers out of the sky. And there's all these things that are going to creatively help consumers move forward. HOAs, as we were talking about, are one of the ones that are dealing with it, because you have HOAs in that example I gave. They have one section of the HOAs considered high fire, but the rest of it's low. So if they're able to push back or mitigate, then we believe that we're going to be able to bring in different companies, whether it's Lloyd's and London companies, or different ones that are going to be able to help fill those needs and bring down the rates.
Yeah, we have to bring competition back.
That's it.
And so, I think that's the key, is making sure that the homes are protected enough so that insurance carriers are going to want to come back.
Got it.
Right?
Yep.
All right, so let's talk about what a buyer can be doing right now as they're in escrow. They're trying to figure out if they can afford a home. Interest rates are high, but now we've got insurance costs.
Yep.
So what should a buyer be considering as they're opening escrow on
Really,
properties?
you've got to be out in front. The moment you enter escrow, it's really important. We have consumers come to us all the time. We have 3,000 insurance brokers that are appointed with us. Whether we have consumers coming to us through the brokers or direct. There's no downtime. 17 days, am I saying that right, is your contingency period?
Yeah. For insurance, there's a separate contingency now for insurance. So that's huge.
Huge. And so you have to be on it. I get the phone call every day. I had 2 today. Hey, Robert, we're trying to close today at 1 o'clock. I had one saying, we're trying to close today at 1 o'clock. What can I do? And I kind of smiled and said, we can help you in 3 to 5 days. So really making sure, you're getting out in front, you're getting on the insurance up front to know what your options are, and realize that the California Fair Plan is not the only option. A lot of consumers are being told that. It is, for some homes, the smaller homes, it fits. But the problem is there's a lot of brokers that don't have access to other programs that we have, and it gets a little trickier. I get really upset when they're told that's the only option.
So let's talk about California Fair Plan. There's a lot of hearsay about California Fair Plan. They're going to go bankrupt. They don't have the money.
I'll put that to bed easy.
Okay.
It's good news, bad news when it comes to the Cal Fair Plan. And I will talk about this. It's the good news, bad news. The good news is the way it's structured now, it's very, 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 very unlikely it goes out of business. And the reason for it is they have a loss assessment provision that was scary enough put in December of last year.
Wow.
Within a month of timing. And what it does is, much like an HOA is, California Fair Plan has the ability to loss assess all the other owners of the policies for money for shortfalls. Now that's the bad news. So when you're on the California
consumers will be paying,
Yes.
is what you're saying.
And so why it's a problem is potentially is in the past, consumers have realized that when you have an insurance policy, You pay your premium, and that's kind of where you're locked in for the year. You know that's what your cost is. The problem for everybody out there, and I say this now, is when you're on the California Fair Plan, there's no locked in amount. If your policy was a $3,000 policy with Cal Fair Plan and it renewed at $3,000, they have the right at any point during the year between when it starts to when it ends, your policy, to loss assess additional money. That could be thousands of dollars on top of it. So that's the negative. So the positive is it's very hard for it to go insolvent. The negative is going to be that the owners themselves could be hit for bad years in loss assessment, just like a condo.
I love it. I love it. So I would just say, if this could go on forever, and we'll have.
Well, we're gonna win this fight. We've already turned the tides. So I mean, if anyone that's out there can go onto our website. I've been on plenty of podcasts. You can look me up, Robert Feldman at WOWS, WOWS, insurance.com. My email is robert@wowsinsurance.com. Everyone forgets the S, and so I always tease everybody. But what I would say is
they just want to be wow, but he's WOWS.
I did just to kind of have fun messing with everybody at that point. But what I would say though is really you got to realize that we're turning the tides. It just takes time, and that's it.
So super knowledgeable, super informative,
thank you.
Very positive. I feel like you are leading the chart.
We're going to turn the tides,
which is huge. We got to get the companies back in. The good news is buyers can get homeowners insurance, so that's super important. And always thank you for being here. Thank you for being a friend and a good partner of ours.
Thank you.